Welcome to Crypto Cube Analysis. My name is Crypto Cube, and I want to continue the supply and demand lesson which I started recently. So, from the previous lesson, I made sure we were able to understand the underlying factor behind the creation of demand and supply zones. And I mentioned a simple trick to identify supply and demand zones by saying if we look for a rally, base rally, and a drop base rally for a demand zone, and a rally base drop for a supply zone, as well as a drop base drop. Mind you, the drops or the rallies or the base in general may not necessarily be straight lines. It can be something like this. As we know, the market moves in zigzag forms, and the base will be something like this, only to then to continue upwards. So, I also said that creation of demand and supply zones can be due to some factors, which then I said we have genuine demand and genuine supply, which means real demand or supply coming into the market, or rather fresh supply and demand coming into the market. As well, I said we have lack of liquidity when the sellers are not selling lower, or where there is scarcity in the market and then prices rises due to that, which is lack of liquidity. Then one thing I didn't mention, or two things I didn't mention, is that demand and supply zone can also be created due to profit taking, and we identified that very soon. Also, supply and demand can also be created due to economic factors such as news or events. Now, let's look at these two scenarios where I will use demand for this example, but bear in mind that when I talk of demand, the inverse is opposite for supply. So when we have a rally, and then we have some base, then another rally, and then we have a drop, and then we have a basic candles, and then another rally. Automatically, this becomes a demand zone, as well as this becomes a demand zone, because the rally here, this is the origin or the base of the rally, and the base of the rally is where we take as a demand zone, where the demand came in, and then here is the basing leading to this rally. This previous rally, we also have a basing like this. So that basing will also be a demand zone. But we are currently not looking at this particular basing, which is what we have here. And for there to be a base here, there should be a drop. Now, out of these two zones, which of these two zones do you think is created due to demand coming into the market, or lack of liquidity, or due to economic factors, or due to profit taking? There is a catch. You want to know that smart money, they like to buy when there is sell side liquidity, or when there is excess supply, where there is surplus in the market. That means they want to see the market coming down. Smart money will not place a market order to then reverse this market in one straight line. No. Rather, they ladder their buys using the iceberg format. The iceberg format is like a method of scaling entries, where they have an entry at this level, another entry at this level, another entry at this level. The first entry may be small, and the further down one will be a bit bigger, and it continues to grow bigger like that. By growing in an iceberg formation like this, means when they first buy here and buy another bigger order here, the average entry price will not be at the 50% mid-range, but closer to where they are bought. And when they even buy a much bigger order here, it wouldn't be at the 50% range of the average price and the current price, but it should be closer to the current price. That means they get a bargain price on their overall buys. So smart money wants to see that the market is dropping for their orders to fill. They do not want the market to be stagnant only for them to market buy. No. Market buy will give them a very bad average price, which may at the end of the day work against them. So they want to see that there are sell orders, a lot of sell orders coming into the market, and they want to start buying quietly, which means either limit orders or any other form of quietly buying into the market without no one noticing. So bear that in mind. Now, if there is a drop coming into the market like this, and that shows that there is excess supply, right? And for there to be a pause in the market, or a point where that excess supply is met by an equal amount of demand, who has such money to do that? It is the smart money. So that probably shows they are buying. And we can only confirm they are buying when we see a rally like this to the upside. So depends on the amounts they buy. Either there are still others left on their hands to buy more or not. We will also look at that. Another thing is, when we see a move like this, when this move has not yet completed like this, it is basing. It is so consolidated. We cannot tell if it will break to the upside or it will just break to the downside. If it breaks to the downside, then this will become a supply zone by drop, base, drop. And people who trade Wyckoff, we call this a redistribution zone. But if it happens like this, is it really a redistribution zone? Let me use the demand for example. So we have a demand coming into the market, then the market starts to base, and then it breaks upwards. Then we say this is a reaccumulation zone, which means a new demand zone has formed due to bulls reaccumulating longs or buy orders. But is that really correct? What this exactly looks like when we look at the scenario that bulls or smart money wants to buy when there is large orders coming into the market. Looking at this structure of rally-based rally, like I do not know if you can get a rally-based rally here. Okay, this is a rally, then we have a little base and a rally here. So are there enough sell orders for the smart monies to buy at this particular point? I do not think there are sell orders coming into the market at this point. Of course, there are sellers. People are selling, right? But are the orders they are selling enough to feed their large bags? This structure plainly looks like a profit taking. They have bought at this point the first demand, where the first demand came, where the sell orders that were coming into the market were stopped. The sell orders that were coming into the market, where they were stopped. These were sell orders and they were stopped. Then the demand came. Then this is a profit taking by the bulls. They are taking profit, taking some profit out of the longs they are taking here. So when we see this action break to the upside, this is probably a profit taking zone, which is also a demand zone because we saw demand further coming to the market with this movement here. But some people call it reaccumulation zone. But if this is exactly a profit taking zone, that means genuine demand wasn't coming into the market at this point, but people were just taking profits off of their previous longs. So when the market comes back into these zones, do you think they will be interested in buying at this particular zone again to push price to the upside? Or do you think price will just come back to the old demand zone where they initially stopped the excess supply coming into the market and push the price higher, and then they reverse the market like this? Which do you think will hold price more? Is it where the genuine demand came into the market, or where they took some profit off the table. If this is exactly a profit taking zone, then that means the money they come into the market, they have nothing to defend, they have nothing to guide it. They only took profit and they moved down, taking another profit probably at the top here. That is why rally based rally or drop based drop most times fail. But it is not all the times that they do fail. Sometimes they work quite well as well. Like if you look at this particular point on the chart, this is a rally, this is a base, and this is another rally. But then when price came close into it, if you use the wicks of these basing areas, then you will be in the market. You will be in a trader, then you will enjoy this movement to the upside. That is where we have to look at the basic candles. The basic candles are the number of candles we have 1, 2, 3, 4, 5 here. This is a move up, this is another move up. Then this was where price started getting weak, where it couldn't go up. This first red candle, that is 1, 2, 3, 4, 5, and this, the breakout candle, won't be counted as a base because it was the one that broke the range. It was the one that broke the range here. I have to disable this magnet. It is the one that broke the range, so it won't count it. And the last up candle won't be counted because it is the last up candle, so it can't be counted as one of the base. So we count 1, 2, 3, 4, 5. Whereas sometimes you have a lot of basic candles where these candles will be more than 10. So how do you determine which of these base will work? We have ascertained that we take the reversal zones where price were dropping and then it reversed to the upside are better than rally based rally or drop based drop. But those of the drop based drop or rally based rally that works, how do we ascertain which one will work? This is the thing to look at. Okay, we have a drop. Buyers want to buy, right? Then we have a base like this. Then we have a rally. Let's use it for rally. It can also work for drop. Then we have another zone like this. We have the drop. Then we have a base and we have a rally. Which of these two zones do you think? We have a zone there, right? We have all these areas as zones. Oh, sorry about that. These are zones. Let me just highlight it like that. From this top to this bottom, it is so. From this top to this bottom, it is so. So both are zones in this. Which of these two zones do you think we hold price and push it to the upside when they choose to make a retest? Which of these two do you think will work like this? Looking at the base, let me give you a quick scenario here. If you have a petrol station, a fuel station, and assuming the limit of the tanks for the fuel station is 1000 liters, 1000 liters, right? Just an assumption. Then you have another second petrol station with the same amount of 1000 liters. Now, cars we pass by in front of the two stations. This is the road, right? Assuming you have a signboard just by the roadside telling you how many cars have passed by and stopped by to buy fuel at these filling stations. So if you have each car, assuming the limit of each car is 100 liters, the tank size of each car is 100 liters. And for this car, for these filling stations, we have the number of cars that are taking fuel from here to be 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 cars have taken fuel from these filling stations. Whereas this filling station we have 1, 2, 3. Only 3 cars are taking fuel from these filling stations. What will be the leftover? What will be the fuel reserve left on this particular filling station? It will be just 100 liters. if the cars have an 100-liter tank, right? So because this is their tank size is 1,000 liters. 9 cars have taken fuel, which means 900 liters is out, remaining 100. Whereas this, only 3 cars have taken fuel, which means 700 liters is left. And if there is a public display that shows the amount of cars and the amount of liters they have, which do you think we have more fuel? Which of the 2 stations will you want to go to? You believe the fuel of these people may not even be up to 100 liters anymore due to some other factors. Whereas these other filling stations, we still have 700 liters left, which is even way above you need to fill your own 100-liter vehicle. You will prefer to come to this particular filling station because they have excess fuel available, unlike this. And we know fuel do dry, so it's possible what is left here is just 70 liters. So if you need 100 liters, you may not get it, but here it is guaranteed that you will get it. So more cars will avoid this filling station until they refuel their tank or they refill their tank, whereas more cars will start going here until their tank is exhausted as well. So this zone is the same thing. Here we have others here which have money, huge amount of money, and this huge amount of money here, the more time is spent on that zone before the rally shows, the more orders that got filled, which means the more cars that visited the station. So the more orders got filled here, and here we have lesser orders getting filled. There is high probability, after seeing this rally, there is high probability that there is little or no fund left on this order. I mean on this particular price line or on this particular demand. So when orders come back in, there may be no leftover buy orders to fill at this particular point, or there may be very little. Out of 1,000 you have 100, and 100 will just fill, maybe create a little bounce and then drop to the downside. Whereas here that still have some excess petrol available or excess funds available, price will come back into it, get maybe 500 of those leftover out of the 700 filled, and then price will push back to the upside. So the lesser the basin area, the more or the higher probability it has of holding price than one with a lot of basin areas like this. So when you see little base areas like 4 to 5, it's still okay. Maybe maximum you want to take is 6. But when you start seeing a lot of basin candles, it shows that there are a lot of orders that have been filled, and there is high probability that all the money that smart money were buying at that point is exhausted. So they have no money at that point anymore. Then when the price move up, they either take profit and push price down. Then when price returns to it, you see it breaks because there is no more money left. There is nothing to defend at that particular point anymore. But when there is still some leftover funds of left petrol in the fuel tank, then they still have something to defend. So when price returns to it, you see a reaction to the upside. Now, another thing is zones created by economical factors and news. Let's look at this scenario. Assuming price was trading, maybe assuming, or let's say we have a rally, then we have some base, and then there is an economic factor that created an event or something that pushed price to the upside, like when Elon Musk tweeted about Bitcoin, and then we saw it rally. Also about Dogecoin, and we saw it rally. So he said the company Tesla has bought so amount of Bitcoin, right? And when he tweeted about that, people will take note of this basin area, as this was the point the news came in, that economic factor that he did. because the news was bullish that institutions are coming into the Bitcoin market. So for that to happen, people will take note of this basing area as the point at which he bought. So if he has bought at this particular point and the price has pushed up because people saw that news and then they saw it as bullish and started buying, that means he will be in profit. And for him to be in profit, when price comes back to this area, what do you think will happen? People take it that these are the points he bought, right? Probably was the one buying here. There were little sell orders because, so if he has bought here and he haven't taken profit, because if he take profit, he might want to tweet about it. So price can go down for him to buy again. So people believe for him to buy at this point, his funds came into the market at this point. So he has an interest at this point. Either there were sellers, right? But there are no good sellers. That means it might take a lot of time for him to get his orders filled. And for him to take time, for him to get his orders filled, means once price comes back here, if he wants to defend this area, because he has his investment entered into the market at this point. So he won't want to see price going down and then he start realizing losses. So this area becomes an area of interest that will be defended. So it doesn't matter if the price was previous value and then a base. There were sellers, but he is preventing those sellers from pushing price down with his large orders, only to trade and then people from moving and bought. So when price comes back in, you expect that he is still in the business, and from this point, so this point is a point he wants to defend because he won't want to realize losses. So people knows the money came into this market at this point, and even if the money is no longer available to come again, people will put their money here because they believe he still has interest in the asset. So this area will be defended only for the price to then continue to the upside. Now another thing is, assuming at this point, after he has bought, assuming at this point where he tweeted that and people bought it, assuming at this point he has sold all his assets and then he made another tweet that Bitcoin is not worth it or something, some sort of bad news, and that he has decided to sell all the holdings, what do you think will happen? People will start selling, right? Now, this was the point he bought, right? Do you think people will still believe he has interest in the very day so? No, because he has clearly shown at this point that he has sold all he has bought. He has taken his profit and he has moved on. So this area now becomes an area of no interest. It becomes a worthless area. Some people will see it as an area of demand, but then the moment people knows that he is out of the market and no longer interested in defending this area, price will come in, maybe give a little bounty to other people buy, and then break the zone. That is exactly what will happen, and that is exactly what happens with news. The moment the effect of an economic factor or news wears out, wherever zone is formed due to that news is weak, it no longer becomes valid. So if it is a rally-based rally, when the news came, it becomes very weak. Even if it is a drop field base and rally, if it rallies due to economic factor or news, the moment the effect of that news is worn out, that zone becomes worthless because nobody is willing to defend the areas anymore. And as we know, smart money, they do not want to find where is the man zone on the chart before they buy. No, they just want to see a big and large sell orders coming into the market. So when that happens is when they will choose to buy. Pardon the background noise, that's my kid making noise. Quite disturbing a bit. He's preparing to go to school actually. So that is it about news. Also, it is the same with lack of liquidity, where you see a demand generated due to lack of liquidity because the sellers weren't willing to sell at that particular price. They are increasing their asking price. It is not because demand were coming into the market. So whatever demand is formed at that point is weak because there were no genuine funds coming into the market at that point. So there are no leftover funds. So when price come back into it, it may give a little reaction and break. That is why most times demands break because they are created due to news or some tweets or some economic factors that gets worn out or lack of liquidity. But when you see a zone holding like this now, then that is probably due to genuine buy, like this supported with volume. If this is not supported with volume, then that won't be a genuine buy. So sometimes your rally based rally and your drop based rally will hold if and only if genuine buys came into the market, or if the news that is propelling the demand of that asset is still intact. Like BNB yesterday, or was it today, very early today, he made a tweet that coin burn is happening in the next few days. That is a bullish news because the more you burn your coin, you will reduce the circulating supply, you will reduce the total supply. That means you are creating value for the coin. That means the price of BNB can even go further, and people will see that as a bullish news and keep buying until the burns happen. So if there is a demand zone created due to that effect, in as much as the coin burn haven't happened, that area will still be guarded. But the moment it happens, then that area may become weak, except you have truly and genuine demand coming into the market at that particular point. So these are the ways to identify weak zones and strong zones. Like I said, the lesser the basin area, the better the zone. This one with a lot of basin area, it doesn't mean it will not work. There may be a lot of money. Maybe this is even 10% of the amount they wish to buy. But it is better, as we want to take high probability, to take a zone with lesser basin area, because it is a form of assurance that there is still funds left on that particular zone. Unlike one with a large basin area or large sideways where a lot of orders have been filled and sold. So that is it. But then this can still also work as well. I do not know if we have. Okay, see this movement here. Here the indicator I have is showing a supply at this point. Price came into it and fell down. Now we have a demand at this point. If you are using the wick to trade this, you will be filled in and you'll be in profit. But I wrote it from the body. I got missed out on that particular trade. I took this short. I took it, but I didn't wait so long because of BTC action. It was bullish, so I didn't want to risk trading against the trend. And if you look at this trend on the daily time frame, you will see it is bullish. So I do not want to trade against the trend. So I got out, or let me say I chickened out of this short trade. But then if you look at this is a lot of action here, especially when we go lower. There is a lot of price action there at this point, as you can see, all the way from here. So there are a lot of price action there. Some people won't take it based on a lot of basing, but some people will also take it. It doesn't mean that is why time frame matters. If you're looking at this trade on the 1 hour, definitely there is no trade at this point. But if you're looking at it on the probably the 6 hours or the 8 hour, even this was a falling candle. This tried to, it couldn't go up, so the base started from here. 1, 2, 3, 4. So 4 base on 6 hours, and how many base on 8 hours? This is 1. I wouldn't count this one. We just say, okay, this is the one that made a low. This is the basin, just one basin candle. Then the out. This was falling, then this was a base, and then that came out. So it is one basic candle on the 8 hour, which is still quite good. But if you go on a very low time frame, it wouldn't look good because of a lot of action. So time frame also matters, which is why the higher the time frame, the higher the priority, or it takes higher precedence on higher time frames than lower time frames. Except you then narrow down to an area where it is very good on a low time frame. and then you take the trade, which was what I did. I narrowed down to 30 minutes. That is this inner zone here. The moment the price came into this zone, I waited, then it gave me another supply zone here using the indicator. Then I took the trade on the test of it at this point here. Yeah, I didn't wait for long for it to come all the way down here. So this is how you can find out which zone is strong and which zone is weak. Even a weak zone might give you the best risk reward, while a strong zone will keep failing. So it doesn't matter. That is why we have confirmation trading. You can trade with confirmations and see which zone is posing to reverse the trend. But bear in mind that reversal zones are way better than basing or rally-based rally zones. Zones that happen mid-trend. Let me see if I can get a quick rally-based rally. I don't know. Okay, look at this. We have a drop here. We have a base here. We have another drop. Price came into it and triggered it, even though it seems to be coming back, but it has top haunted it. So that is a rally. Drop base drop. This is another drop base drop here. This is a rally. These two candles, we have big candles here. This is 1, 2, so it becomes a rally, then a drop. So this is a little rally based drop and not a drop based drop. You can also take it as a drop based swap, looking all the way from here, drop base drop. Or you can say, if you look at it on mini structures like this, up, down, down, up, down, up, down, up, down. So that way it is a rally based drop. So let's end this particular video here. Then in the next video, we talk about identification. I have talked about identification of the zones already, but then I will talk about it again, which is either once you see a demand zone here, what you look for to identify your zones, apart from looking for rally based drop or drop based rally. Another way and the easiest way you can use to identify zones, even if the zones are formed mid-trend. So like I said before, you either use the wick to the bottom or you use the opening, that is the open and the close, to the bottom. So in the next video we will talk about that in details. Stay tuned and thank you for watching.